I'll ask one more question. Inverting of the US yield curve, there's going to be a peak of stimulus, or the government stimulus is going to peak and so on. But if you look at that and if it does invert, it's a pretty good predictor of what's to come. And maybe the stimulus won't protect against a potential recession. Do you put any stock to that argument or not so much?
I think the inverted yield curve is definitely worth listening to.
Is it going to invert though? With the Fed moving 2 to 3 times?
I do, yes. I think it'll invert. But you've got to realise as well, I think I looked at this a few weeks ago from memory. It inverts on average about 2 years before a recession and stock bust. Like, it's not imminent. And there were some occasions where it was even 3. But most of them it was a couple of years before.
And there's plenty where it's inverted and not had a stock one as well.
Not in modern history, or not in the US.
Right.
Anyway, it's a very good predictor in the US, so it's definitely worth watching. And you can see the Fed. It's funny when these things start to go sour. The central banks, start to build sort of propaganda answers to all the difficult questions, and you can see the Fed now is sort of cherry picking which yield curve is most predictive and stuff, and putting out research that, it's not that yield curve inversion, it's this one over here that matters, and etc. Which is probably a contrarian signal.
So I think the key to this is what David was talking about before is that whole wage growth thing in the US. Can it kick the spark that gets and turns into and we do get another leg up, a sort of self-sustaining wages-driven boom. And I think that's what the market's looking at as well. Is it's sort of there's a bunch of people out there saying yes we can, and there's a bunch of people saying no we're stagnant. This is and so that's the battle we're in, and so. Yeah. You'll know who wins because if it turns in a particular direction.
I mean, and the Fed plays a key role, obviously the key role in this. If Janet Yellen was still in control, I would say the yield curve inversion would be further out. She was such a dove, and she was already talking about running the US economy hot. In other words, letting wages really run, because I think she recognised that they needed to address inequality, if nothing else, plus, secular stagnation and all of these things that were really holding back the whole US political economy. With Jay Powell, he seems more hawkish, but that said, and he hasn't talked about running the US economy hot, but he did recently say, I'm going to pause mid-next year in the tightening, and that comes back to that fiscal cliff. They know there is a headwind ahead, but if they can run, decent wages growth into that, then they get a bit of a headwind. That may be just the cooling they need to stop the whole thing blowing off, because that's usually how these cycles end. If they do get a self-fulfilling cycle, then wage rises, feed on consumption, feed on wage rises, and eventually the Fed has to stop it. And when you've got tariffs coming in at the same time, they're very inflationary. So, it'll be down to how far the Fed wants it to run, how hot they want to run it. They still look reasonably prepared to let it go, to me.
Could it overheat even with the rates going up in the short term? Is there going to be enough there in the back end, especially with the tariffs?
If you had asked me that 4 or 5 years ago, I would have said never again.
And that's not saying anything for what's happening in Venezuela and so on.
But they have injected a huge amount of fiscal into that economy, and it's running hot. You look at, if you deconstruct the labour market there, there's now 11 jobs for every 10 unemployed. Like, wage rises have been extraordinarily subdued so far for various reasons, but they are starting to accelerate. If they
starting to accelerate, we're going from terrible levels to
pretty average,
almost average levels.
Yeah, well, we're nearly at 3%. So I mean, inflation's 2%. Like US households are going forward.
But until you hit 4, you wouldn't.
Yeah, no, you wouldn't. Like, it'd be stupid of the Fed to panic about inflation at this point. I mean, given, you know, the struggle they've had to get this economy moving for, you know, post-crisis. So yeah, I mean, it'll be really interesting times. It's very evenly balanced. Like, that's why we kind of presented as scenarios, because it's not obvious which way this will go in the US over the next kind of 12 or 18 months.